Yes, initial jobless claims coming in at 3,169,000. So darn close to expectations. Most were looking right in the zip code of 3 million. So 3,169,000. And if we look at continuing claims, they moved from 17,992,000 up to 22,647,000. And for some context, continuing initial claims are basically running half speed to the high water mark, which was 6,867,000. If we look at non-farm productivity, first quarter, minus 2.5. That is basically the worst since the end of December. And also, for some context, this series started right after World War II, 1947, and the low water mark is minus 11.7 on productivity, and that was in the year it was introduced, 1947. So we're a long way away from that. Unit labor cost moved from 0.9 to 4.8. That makes sense as well. Interest rates hovering right below 70 basis points, 69 and change on a 10-year note, which was at its high watermark intraday yesterday, right around 74 basis points, darn close to a one-month high yield on an intraday basis. And, of course, we know supply coming out of the woodwork, no matter where you look. Mortgage-backed securities, investment grade is just absolutely on fire. Some of the high yield, it's been a record pace, but it has maybe moderated just a bit. And, of course, Treasuries, second quarter, based on refunding information, is most likely going to be around 35% higher than Q1. And the package next week on Monday, Tuesday, and Wednesday, 3s, 10s, and 30s, is the largest that package has ever been, 96 billion, and that's versus previous package of the same securities, which was 84 billion. Becky, back to you.
Hey, Rick, I always love a good history lesson. I think you said that productivity this time down 2.5%. That was less than the 5.5% estimated. And you said the low water mark for the series that started keeping tabs of these records back in 1947 was a decline of 11.7%. Is that right?
That's exactly correct, yes. And that was in 1947.
So when was that and what caused
basically
it?
Well, I think after World War II, productivity was low because, as we're learning from the meat industry and the pork industry, that when you close restaurants, you might have plenty of meat and plenty of pork, but it isn't in the size and the logistics of delivery. Everything changes. And I think switching from war production back to the economy, well, it really was an adjustment process, and I think that's why productivity was so low after the war.